Hi, this is Colin Richards, president and founder of Lord & Richards. And in this episode of the Lord & Richards Show, we're going to be talking about how you can profit from the recent paradigm shift. And I'd encourage you to take a listen to our most recent segment where I talked about what's going on in our world and the paradigm shift that we're experiencing, because we're punishing borrowers, we're rewarding savers. So here's the bottom line. How do you benefit? Well, for those who meet with us and pursue a comprehensive plan, which is really critical to retiring financially independent, what we want to do is incorporate into your plan investments that take advantage of the current high interest rates, right? Why don't we turn a negative into a positive? Make lemonade out of the lemon, so to speak. Well, that starts with getting a portion of your portfolio into a safe, protected area. I'm not talking about your bank account. That's for a smaller pool of money, right? A few months of side expenses or anything coming up in the near future, like a vacation or a car purchase. But what I'm talking about is that long-term portion of your portfolio that you really believe you're going to need to live on. And of course, at Lord & Richards, as part of our process, we help you determine, do I have enough? Can I retire on time? And as part of that process, we also build into your portfolio a portion of your assets that provide ballast, stability during the kinds of market declines and bear markets we're experiencing now. These safe assets are substitutes for bonds. Bonds, government bonds, are starting to look a little bit more attractive. But did you know you can take that low guaranteed yield while keeping your money safe? You can take that yield and exchange it for the opportunity to earn more interest, all while keeping your money safe. The negative is, of course, safe assets like these are longer term in nature, so they require a lot of maturity on the part of an investor. It requires you to think, kind of like Warren Buffett. I know he recently mentioned having picked up a 10-year bond from AT&T, strong, solid company, 10-year bond. Why did he go out that long? Because he had a 10% interest rate. So it was a great way to lock in some great yield. So investors are being rewarded who, number one, are mature enough to have a long-term time horizon, and number two, who are focused on safety and protection. You don't have to put up with the low yields that we were getting during the previous period, what we called the new normal after 2008. Low interest rates, no yield on safe assets. Now we're beginning to see real yield. And what we're telling our clients to do is don't just take that new safe percentage rate of 2 or 3 or 4%. That's great. That's a lot better than people were getting. But now take that 2 or 3 or 4% and utilize it to leverage it to try to create 6, 8, 10, 12%. Okay? So it's possible to take that low guaranteed interest and exchange it for the opportunity to earn more. You say, well, how do you do that? I love the illustration of the goose that lays the golden egg. Imagine you've got a savings account of $100,000. We'll just use a round number. And it's in a safe, low-interest asset. Okay, so maybe it's earning 2 or 3%. So your $100,000 is getting you, $3,000 a year of interest. Well, that's better than it used to be, but why not take the opportunity to let either the bank or whoever is controlling that safe, low-interest asset, why don't you let them exchange that interest for the opportunity to earn more? You say, well, how do they do that? They leverage it. Because you get so safe with your principal, the goose, right? And you want to save your goose, right? You can get really aggressive with the eggs, and you can turn them into potentially more eggs. And of course, this is all market index investing, which I talk about a lot here on the program. It's a technique of investing that allows you to keep your principal safe while all the while taking advantage of the upward moves in the market, but during the downward moves, keeping your principal protected. Phenomenal way for you to benefit and profit from the paradigm shift. I really encourage you to pick up the phone right now and give us a call or check us out on the web. It starts with a conversation. It starts with you sharing your goals and values, and then we can help you put together a plan for financial independence that will allow you to retire with a good night's sleep and without worry.